World Financial Group offers entrepreneurs from all backgrounds the opportunity to start their own business on a level playing field. Dr. Jana Woodhouse, receiving the WCM Wall Street Pioneer Award by the United Black Wall Street of America, Inc., is one of those entrepreneurs.
I see WFG and TFA as a place where African Americans with an entrepreneurial mindset can flourish. And the bonus, we help families and serve the communities across the country.
To learn more about us, go to worldfinancialgroup.com.
We are the sons and daughters of the soul. We are resilient and forever forward thinking. We ask for nothing else than the opportunity to live and to create the lives that we were meant to live. We want nothing but an equal chance at options and possibilities. The same possibilities and options to live out our potential as our fellow man. We want to be heard, understood, and expressive in our reality. We are the future. We are the creative. We are here.
She was told that she couldn't play with the boys. She was told that they were too big, too rough, too strong. She was told to give up her dreams and move on. She was told to just be pretty, be quiet, be a lady. She was told that women had to stay on their side of the court, stay in your lane. Playing and competing with men was insane. She was told that men and women would never be equal. Dreaming like that would only be leaked to your mind, to your soul. She never listened. She knew that their thinking was old. She was magic. She is the definition of spirit. She is what champions are made of. She is magic.
So greetings and almost Happy New Year. Of course, today is still part of Kwanzaa. This is Nia, and we have what's called purpose. And so today we're going to talk a little bit about purpose. Okay, I'm Dr. Jana B. Woodhouse, and of course, we're on Access Wealth Nation, part of the Soul City Broadcasting Network, and also broadcasted through WHCR 90.3 FM in City College. And so I missed you guys. I this whole season has been really interesting, and it has been a serious tax season. For me, it's been a getting healthy season. As many of you may know, I changed my diet. Yeah, I know I look a little different, but it was to get healthy as opposed to just losing weight. We needed to get healthy. And that's what we all should be doing is during this time, especially with COVID or Omicron or the flu, get your immune systems up and work so that you can be healthy and live through this, because we're all about wealth. Today we're trying to talk always on Access Wealth Nation. We got to talk about getting your checkup from the neck up, because everybody gets a checkup going the other directions, your body, but you've got to get your health together. But again, your financial health is very, very, very important. And of course, as I always give this opportunity, and some of you were smart enough, I gotta say, y'all, some smart folks, you asked for the book and it became a stocking stuffer for you. You didn't have to pay for it. So, we have the How Money Works, Stop Being a Sucker. And it was written by two of my partners, Tom Matthews and Steve Seabolt, up to 600,000 distribution in 2021, and I know it's going forward. If you'd like the book, all you gotta do is send me an email on anajenterprisesinc@gmail.com and say, I want the book. Could you please leave me your address? This is a physical book, not an ebook. So for me to send it to you. It's free 99. I'm not even charging for the shipping, but you got to at least give me the address that I'm shipping to. But it's an awesome book. It's real simple to read, take no more than about an hour to read, but it'll give you your foundation on financial literacy and the 7 money milestones to your financial awareness, so don't give that up. And those of you for the new year, maybe you'd like to get a free financial analysis to take a look at where you are now and where you'd like to be. This is the best way to start. I know everybody does those. I'm resolution, the new year. Well, every day that you wake up is a new year. It starts the new year. So how about taking yourself to the level of getting your free financial analysis? Sit down with a financial advisor. I have plenty talented people in my office that would be willing to sit with you. There's no obligation. You hear that? No obligation for getting the analysis. And if you want to do something, we may be able to help you. If not, you got your analysis. You've got a plan. Because if you don't have a plan, then you definitely are planning to fail. So you need a plan. And sometimes you need to have someone help you. There's so many people out here in today's world and so many gimmicks to that are holding you up from figuring out who do I talk to? Well, you have a right to interview individuals to see exactly what they offer. And are they just trying to sell you something, or are they going to try to help you change your life? So that's something very important. I hope you take that tip. We've got 2022 coming on fast and with a vengeance. And there's so many things happening. Just to take a note, if you have any questions, comments, please feel free to place them in the chat, because we'll be glad to answer them if possible and get you rolling. I know a lot of stuff is happening. I decided that many of you know, as an accountant, I have some end of the year requirements. And so I did my end of the year requirements this week, and I was behind schedule because I was under the weather and had a little scare, but it wasn't really COVID. It just turned out that I had a scare, that I thought, because thought I was running a temperature, a fever, to find out it was the thermometer that was broken. But stuff happens. So watch your mind sometimes, because your mind will take you places where you don't need to be. Remember that always the mind hits first. So say in yourself that whatever is going on, I know everything's in divine order and I'm divinely healthy. And so things will change for you. But that being said, we're going to talk a little bit today about the tax laws, because I just got out of class and I have to say it this way. Y'all may not be so happy with the changes that have taken place. It's not the worst, but it's not much different than last tax filing. So I'm going to give you some tidbits, and I hope you get a chance. You tell folks to come and listen or listen to it later. And if you have questions, please feel free to ask them. First and foremost, I'm going to say this was not a good 2020, and it definitely is a worse 2021. It doesn't look much better. And there's some certain provisions that are taking place now. I would say to all of you, I know you usually get a lot of deductions. There's money that came in. Many of you had stimulus money. Some of you did not get it. There was a stimulus that was paid out, one for $1,200. Then there was one for $600. And then near the end of the year, this year, it was the beginning of the year. There was 1,400. There's a possibility more to come. And we're going to talk about some of the stuff that possibly could happen. We're still waiting a little bit on Congress. But yes, Congress rules what we do. And unfortunately, we've got a lot of changes taking place in Congress. So you've got to be a bit careful. That being said, I want to talk about one thing that did happen this year there were people who had their student loans forgiven, and they will be receiving something called a 1099-C. That's a cancellation of debt. Under normal circumstances, that 1099-C would cause income added to your income. But because of the COVID relief bill that was signed in March, that's no longer the case. So starting in 2021, loan cancellations for post-secondary education is no longer considered a taxable income. That's a good thing. Now, this is going to keep going till 2025. They haven't gotten rid of it. And then also, it may even be permanent because there are some bills coming out that hopefully they'll turn to law that you can get loan forgiveness and it not be added to your income. Wouldn't that be fantastic? Now, if your employer helped you pay down your student loan, some people had that. That's considered a little bit of a fringe benefit, a bonus. Well, you get a chance to exclude because those bonuses do have to be paid taxes on. But you can exclude up to $5,250. So there is someone, if one of your employers helped you, you could write off that much or exclude that much of it. So if it was $10,000, you could still exclude before paying taxes 5,250. But I don't really know a lot of employers who were able to help, especially during COVID. But if you had that glory, then you get that opportunity. The next one, and we're only going to go through about 7 of them, but this is one that I think has really changed the way we look at our medical bills. One of the things is that with our high medical expenses, because many people got caught with COVID and Omicron or the flu or just plain illnesses, and they ended up with very large medical bills. Now, if you paid them, listen to me, if you paid it, then you can utilize it as a deduction. You know, if you didn't pay it, well, you still owe it. And until you pay it, you can't deduct it. But if you had hefty medical bills, then what I would say is that you do have a right, if you can, to write off. They've changed some things here. Back in 2019, you could only take what was over your adjusted gross income. So that's after you take all your deductions, whatever's left to pay taxes on. You took 10% of that, and then you would be able to, anything over that was able to deduct. Well, that's changed. It changed last year, and it went down to 7.5%. See, this is why it's so important that we understand basic math, or you go get yourself a good accountant or financial advisor to help you. So what does that mean? That means that if your adjusted gross income, that means that after you've taken all your deductions, your adjusted gross income is 100,000. Let's say you were fortunate. You could really deduct what was unreimbursed for medical expenses that exceeded the $7,500. So if you had a considerable medical bill, that's what you would be able to, above it, be able to take that as a deduction. But it has to add up to more than what they call standard deduction. If y'all remember, the previous administration increased the standard deduction. And standard deduction means that you don't have to prove anything. The government just said that's your deduction and take it off of your income. So I say at this time, it is so important that you take the time and sit down and figure out what your taxes look like. And that brings me to basically the boost that took place in the child tax credit. Now in 2020, eligible taxpayers could claim $2,000 credit per child that was 17 years old, well, 16 and under. If they were 17, you got nothing. Okay, that's when they start eating and using more money, but you get nothing. Okay, these credits were partially what they call refundable, meaning that the government sent a refund check and some up to about $1,400 per child for low-income filers. And those that had at least an income of 2,500, 2,500 in income. Yeah, that's low income. And so that's nice, but the credit really got for 2021 a little sweeter. So what did that mean? That meant that some of you, especially in July, if you had children under the age of 7, you got $300 a month for child tax credit. And those that had ages 7 to 17, then you got $250 a month. And there was a couple of rules that you had to have. If you were a single filer, you had to have under $75,000 in income. Head of household, and I'm going to go back to that head of household in a minute. Head of household, 112,500. And if you were a couple married filing joint and had under $150,000, then you got the full benefit. Here comes the situation, and I am putting you on alert. Those of you who received the child tax credit, either the $300 a month or the $250 a month, please, please, please be careful. Know what you received. Go back in your bank accounts, go back in your savings account, whatever, wherever you put that money or spent that money, and check and see how much did you get, because this year's filing is going to ask, what did you receive? And are you eligible to receive the other 6 months? This is called an advance payment. So you must know, because your accountant, tax preparer, or yourself, if you use tax software, must know the answer to that. Very similar to those that were asked last year's filing, 2020's filing, was, did you get the stimulus check? I can't believe how many people didn't know whether they got the 1,200, the 600, or the 1,400. I was astounded. You can't tell me that things are that easy and that simple that you can't remember if someone put $1,200 in your bank account, but it's important that you go back and check. Now, if you did not receive those stimulus checks, you can go to irs.gov. I'm going to say it again, irs.gov. And when you go there, there's a section, where's my stimulus? You can fill that in. And by filling it in, you can find out whether they sent you. The reason why I'm saying to do this is so important, because some people received the stimulus and didn't know it. Why? Because they either had a check that was deposited into a wrong account. They may have had a direct deposit that they didn't pay any attention to. Or what's worse, which I'm telling everybody, you've got to check. You got to be proactive. So you got to go to irs.gov and find out, where's my stimulus, or the status of my stimulus. The reason being is that the government, if they didn't get the check, didn't get the direct deposit, there's a good chance that they sent this debit card. It's a card. And y'all know what that looks like. When people are trying to get you to open up a credit card or a credit line, and they send you those fake credit cards. Well, I know a lot of y'all just throw it away, but it might have come because the government sent it in a blank or a clear envelope. And so it didn't have the government's information on it. So you could have thrown it away, which meant you just threw away your money. So you can get it, but you're going to have to do a little work. We get a little bit lazy. I don't want to say that word too many times, but we do. We get a little lazy. We want somebody to do something for us. Make it simple. This is your money. If you want it, go find out where it is. That would make your life a lot easier, I'm sure. So I would say to you, definitely take that time and see whether you got that. Now, if you haven't gotten it for the children, because that can be a considerable amount of money depending upon how many children you have. And it could help. It could make the difference of being able to clothe the children, being able to get a decent meal. These are some of our serious times. I am so astounded here in New York about how many people are homeless, have no place to live. And so this could make a difference. But to do so, you got to follow through and find out, what did you get, where did it go, and what can you receive, and it can make a difference. Now, next comes what we call higher standard deductions. Now, standard deductions, what that means is you don't have to have any receipts. Okay, all you got to do is figure out your status, whether it's single, married filing joint, or married filing separate. And there's a lot of discussion about why people want to file married filing separate. I don't know what happened to us. We went and got married, and then everybody wants to file separate. They don't want this person in my business. This person. That's another discussion. Hopefully, at some point, Soul City will allow me to do a show on couples and money, because it is amazing what's going on in these days and times. But with the standard deduction means that you take your income, and if you're single, you automatically get a write-off of $12,550. So you don't have to prove anything, okay? Married couples that are filing separate, which means totally separate, you're not keeping your assets together, it's up. And so this would be up from last year, which was about $150 difference. So it's $12,550 deduction. So this, what deductions, standard deductions do is lower your taxable income, so you pay less in taxes. Then you have head of household. Head of household, you get to write off $18,800 for having the status. Now I'm going to take a quick moment on this thing with head of household, because IRS is not playing with y'all with this head of household thing. Head of household means that you are taking care of a household and providing more than 51% of the livelihood of a qualified child or a disabled adult, or even to your parents. You can be, because you're taking care of the household. Okay, I'm going to say this because people are going to get in trouble this year if they say, that they are head of household and they are not. Example, during my class, which was a little funny, but it probably really happened. A woman said she was head of household and that she takes care of a dependent. Mm-hmm. So the preparer asked, what's the name of this dependent? And she said, Marilyn. Marilyn is with me all the time. Marilyn travels with me. Marilyn even sleeps in my bed. I take care of Marilyn. Marilyn is just tight with me. So he said, well, what's Marilyn's last name? Is it your last name? She said, no. Name is Marilyn Monroe. And he looked and said, you can't claim Marilyn Monroe. She's dead. She said, no, she's not. She my cat. So my question was in the class when this came up was, what social security number did they use? Don't tell me Marilyn the cat got a social security number, but who knows? This is very important and serious note. Why? Because you can't claim pets. I know many of y'all think that your pets are just like your children, and that's really great, but they happen to not be a dependent. They eat like one, but they are not a dependent. So what you have to do is recognize, and this year, I know for myself in my office, we will be sending out a specific questionnaire that needs to be answered to prove whether or not you are really head of household. Now, some people out here, I know nobody listening to Access Wealth Nation, but they're borrowing children or borrowing dependents. Please be very, very careful. If you are not taking care of 51% of the household for someone and they are not your dependent, and you just are taking the dependent and giving them something under the table, stop it. Just stop it, because it's going to get you in a lot more trouble in the long run. Uh, these children, you don't need to be bouncing their social security numbers from person to person. It's not good. In addition to the fact that when they get ready for financial aid, it gets very confusing who has the right to claim them. Don't play with this. It is not worth a couple of $1,000s. It really isn't. That being said, this year they are charging even the accountants and tax preparers for not properly doing due diligence to make sure that these people have the right um, qualification and status. So don't mess this up. All right. That's something, a tidbit from Access Wealth Nation. Okay. Now, if you're filing joint, the standard deduction is $25,100, which is pretty cool. And that's almost a $300 increase in the standard deduction. Of course, there's also some benefits if you're over 65 and older. There's an extra little benefit there. Or if you're blind, there's benefits and standard deduction goes up. So you can wind up spending less in taxes. But again, there's only two things that are guaranteed: death and taxes. Just want to pay less. Okay. Now, there's some updates that have taken place, and this is where people were like, well, my tax bracket is going to stay the same. Not necessarily. They did go up a bit on the tax brackets. Our top tax bracket, for those of you wonderfully blessed people who have over $523,600 worth of income, or if you're a joint couple, 628,300. I know no one's feeling bad about these folks, but this is one of those things that they would be in the 37% tax bracket. What does that mean? For every dollar that you earn, 37 cents is being paid in taxes. So your objective is start to bring it down. And as they go down, there's the 35%, 32, down to, if you're making over $86,375, that would allow you to be in the 24% tax bracket. The real lowest tax bracket is the 10% tax bracket. But to do that, your income has to be like $9,950 or less. And if you're a couple, 19,900. So you've really got to sit down and plan and strategize. This is the close of the year. Tomorrow this is it. This is the end of the 2021 year. Some of you can make a contribution to your retirement plan to lower your income. Some of you may be able to pay an extra amount on your mortgage payment, which will lower the or make the interest payment a little higher. You've prepaid. Just there are some things. My suggestion is always go to your financial advisor or get a financial advisor and work with them to see what you can do. If not this year, what about next year? Now, another point that I'm going to bring up has to do with something called required minimum distribution. It's back. It's back. It was for 2020. Year 2020, you did not have to do the required minimum distribution. What does that mean? So once you reach age 72, IRS says that you must start to withdraw annually from your tax advantage retirement accounts. What's that? That's like your IRA, your 401k plans. There are some stipulations and exemptions if you're still working. But again, you need to check what you're able to, because if you don't take your minimum required distribution, IRS can take 50% of what you should have taken. Not a pretty situation. You worked hard for this. make sure you take care of your affairs. So in 2020, it was through the CARES Act, you didn't have to take the minimum required distribution. But for 2021, you have till tomorrow to take that distribution. And it doesn't have to be taken from one account, it can be taken from multiple accounts that you have in your retirement portfolio. Or you can take it from one account, giving them the amount of money that you have in each one of the other accounts that you have. Those are the things you can do, but seniors who will be at least 72 years old at the end of 2021 must take their required minimum distribution. And so the same thing works for also inherited IRAs. And again, it's important that you talk to a financial advisor and get some advice and guidance, and what to do once you take the money, because that money is going to be taxable. And there are certain ways that you can reduce how much. So, just as an example, if you turn 72 in 2021, you have until April the 1st, 2022 to take your first distribution. Okay, so whatever you do, just don't forget to do it. Now, last but not least, we have something that came up last year, 2020 tax filing. A lot of people gave money and contributions, but didn't have enough to itemize. They didn't have major medical bills. They didn't have a home mortgage interest. They didn't have real estate tax, which that's still here, is that SALT. So you still only get to deduct $10,000 still. That hasn't changed. But if you had given away cash, um, for contributions during 2021, which technically you have till tomorrow to give in cash. You have also technically tomorrow to give away in what they call in-kind non-cash contributions. That's why if you can find um, a Goodwill or a Salvation Army here in New York, a lot of them are closed. They've shut sharp down because this illness is all over the place and they don't even want to deal. But if that's the case, you could take that deduction. The only thing I recommend is that if you're putting clothes into a bag, first of all, I would say spray them. But second is that take an itemized listing of all of what you put in there. If you put 7 blouses, 3 pairs of pants, and then when you give it, you want the date stamped on the receipt. I know a lot of you like to use that, the boxes on the street. I hate those with a passion. Why? Because you don't get a physical receipt, and therefore it makes it quite difficult when you want to take the deduction. Now, the beauty is for 2021's tax years, if they've expanded the ability where, if you all might have noticed that whether you itemized or not, you could take a deduction per return of $300 deduction. Every dollar counts. So don't discount, say, well, that was only $300. No, it was an ability to lower your taxes, even if it's going to be a couple of dollars. So as of for 2021's filing, here we got a bonus. It's $300 per person. So for a couple, you're talking that file joint with the standard deduction, they can deduct up to $600 in charitable contribution, cash contribution. So this can be quite positive for you and give you an opportunity to lower your tax bracket. Also, the CARES Act, I know y'all heard the CARES Act. That was started from the previous administration. But the CARES Act, which they extended for 2021, you can honestly, which I don't know many people in this situation were going to do it, but you could take 100% of your adjusted gross income and donate it and deduct it. You would be eligible to do that if you were able to give that, and I itemize your tax returns. That's the kind of stuff that sometimes can make you feel like you gave something, especially if you got some extra cash, you did a job and maybe you know, got maybe $5,000 and you don't really need it, so you can give that away. That's what you can do. Okay. Now, preparing, and hopefully all of y'all are following me and take action. Um, the key to what we're doing right now is preparing for 2022. It's going to be a little rough because there's still a lot of cuts and things that you can't deduct. But what you can do as individuals, because we do have to do this, we need to take care of our debt, lay it out, put out the interest rates, deal with the highest interest debt and bring it down to the lower one. Start to pay off your loans. If you have a little extra money, put it towards the principal of the loan. The next thing is to search for savings. There's so many different situations out here. you know um, there's things that you can do. You can get rid of or reduce your the deductible on certain things. You can get rid of some of the what are those called, subscription fees. We go ask a question somewhere, they sign us up, and we never cancel it. Well, that could be a little extra in your pocket that you could then take that towards your debt or put it into a savings. Take advantage of some of these programs out here, or a free program that allow you to have a tax program, to not a tax program but a savings program, so that you can reach your goals and your dreams. We have to take our future in our hands, because no one's going to do it for you. And the way that jobs are going back and forth, and so many people are saying they can't even get to their job because of all the rules here in New York. You have to be fully vaccinated, and in some places you are not allowed to even come into the facility, so you can't work. Some people are still working from home, and some places are like making it mandatory that you end up coming back into the job place. We're losing control of ourselves, so we've got to do something to prepare. Um, in the process of it for 2022, you can also refinance your mortgage. Mortgage interests are low. They're around about hovering around 3.2%. So, take that opportunity and see if you can refi. Always checking with your mortgage broker, how much is it going to cost me to refi? Because sometimes it costs more money than what even getting the refi done, and saving on the monthly expense. Um, you want to minimize your insurance costs during this time. So take a look, pull out your insurances, pull out, and see what are you paying and what have you paid over the last 6 months. What have you been paying on? What are your deductibles? Take a look and see if you can reduce it. And then, sometimes it's just putting some spare change away. And, I've always talked about that. You save a little bit. If you save, save a dollar a day, doubling it, or excuse me, there, or even if you just put away the change, spare change. I used to love to do, and I think I'm going to get back on target doing it. Is that hoard your fives? You know, that's one of the best things that you can do, is have that extra money and put it to the side. We got Ray. How you doing? Happy New Year, my brother. Can you briefly discuss how important it is to properly value donated, properly donate, value the donated clothing? I see clients overvaluing, their donations. Listen, there's a form, and if y'all need it, I could possibly send it to you. But Goodwill had a great percentage of how you calculate the clothing. Someone would say, well, I got my blouse was, from Bloomingdale's, and I paid $80 for it. Yeah, well, you're only going to get $2 deduction. That's what you're going to get. So do not, as a matter of fact, do a list of what you have inside the bag. And preferably, if you know when you purchased it, even putting that in. But outside of that is that don't get crazy. I gave 3 bags of clothing. Yeah, but remember, they're even if they're brand new, they're only going to give you a small value behind it. It's better than nothing, but definitely you need to know. So there's a chart that is the value, the market value of the goods that you have. So you, I hear something beep. Okay, so you have there's market values, and the thing is that for the most case, you are definitely probably figuring out more than what it's valued at, even if it's the newest of the newest. You've got to make sure that you bring it down, and if you get that chart from Salvation Army, it is show you. I mean, it's up to things like a coat. You say, well, I spent, $300 on my coat. Well, you're probably only going to get maybe $17 deduction, maybe. So that list is important. So be careful and make the donation. If you can, make it tomorrow at the most. Make sure there's a date on the receipt where and the address. And I would say take the sheet of what's inside the bags that you gave and attach it to the receipt, and making sure that you calculate it properly. But take that to your accountant. And thanks, Ray, for that. That's very important. Excellent. And so, this is a time when we really need to evaluate our finances and take that time and work. If you have an accountant or a preparer, ask them about these things. If you go to the factory, I call it the factory. Y'all know what I'm talking about. You go in, get in, get out. If they don't want to spend time talking to you to do tax planning, you need to leave. Get going. Why? Because this is a time that we need more strategies and look at our world. A lot of people this year, because someone told them that this was the seller's market, they sold. They didn't check and see simple things like, is there a capital gain? Okay, so you made money. Was it your primary resident? Was it part of a rental income? Some of these questions need to be answered before you just say, well, I have 200 or 300,000 I made on it. Yeah, well, you got another cousin here called Uncle Sam. And Uncle Sam is going to be asking for some taxes on that money. So you need to be exceedingly careful. Oh, what we got here? If I contribute a good amount to my church now, will that help with my 2021 taxes? It depends. Since I know you quite well, Miss Kathleen, it couldn't hurt. But the thing is that, it will, if we're eligible to itemize, then you may get a benefit. If not, you did a good job of giving a good heart to helping your church. I hope that answered it for you. But again, you can lay it out and look at it from your previous tax returns. The key is, I would say to folks, is if you've had a good year and you've made money, just realize that someplace in there you need to get taxes done. Now, that's another thing that I have to bring up, because the laws are changing, and there's a thing called estimated taxes. Estimated taxes means that you have for the year income that possibly you didn't pay any taxes on or didn't pay enough. So you have until, I'm almost certain it's January the 18th, you have the ability to pay on your taxes. And so you can calculate. That's one of the reasons why it's in January. It gives you that last quarter. And that's something that you might want to pay a call to your accountant and say, do you think that I need to pay quarterlies? Do I need to, some of you, I know, especially my clients, you all received your quarterly statement to pay, And I got calls today talking about, did I have to do that? And the answer is yes, because if you under withhold, there is a situation of where they can give you a penalty. And that leads to another thing that happened last year. Well, this last filing, I don't want to call it last, it's just this year. If you get an extension to file your tax returns, okay, because you're not ready, you don't have all your documents, if you file those tax returns after the given date of usually April 15th, and you didn't pay on that on the bill before, you get an extension of filing. It is not an extension to pay. So therefore, you're going to be hit with penalties, and the government has already standardized it to the point that it's $453 penalty for not paying your taxes on time. Be aware. So when you come to your accountant with your stuff on April 15th and they can't file those tax returns on that day and that time, there's an extension, but you need to carry a check with you so that you can put more payments out there. Be proactive. You know, everybody talks about they got this accountant that can give them the deal. Be careful of the deal this year. It's not a deal situation, you know. So you have to be very careful and be aware of what's going on out here. You've got to be able to cover your tax liability. You need to pay at least 90% of your liability. So if you look on your W-2 form and it's less than what you paid out for 2021, that should be an alarm, or less what you paid in 2020. You know, be very, very careful this year. The IRS has multiple penalties, you know. Okay, your point on tax planning is so important. Tax planning for 2021 is too late. Yes. Do you agree that sitting down with a professional like yourself, or you, Ray, excellent accountant, yourself a few times a year is better planning strategy for tax savings? Uh, thanks, bringing all the documents. Yeah, bringing all the documents at the in at tax time. Yeah, I think it's important to just take. You don't need a lot of time, but give your accountant an opportunity to look and see where are you. You know, I think that a couple of times now, it may cost you a little bit, maybe a couple of $100 to sit with them to do a tax review. Some accountants will just bill it in with your regular tax prep. But I think that it's so important because true, tax planning for 2021 is gone. It's gone out the door. But 2022 is here and the laws have arrived. And so, yes, I truly agree, Ray, that you need to sit with a tax professional. And again, I will say, if you're going to the factories to get your taxes done, or you're using a tax program and you don't know all the pros and cons to it, even if you want to still use the tax program, you can always sit with a professional and let them look at your situation and see if there's some things that you need to pay attention to, even if you do the factory work. And when I say factory, you'll know what I'm talking about. It's the TurboTax, the H&R Blocks, and the Jackson Hewitts. Call them out. That's what they do. It's not about planning. But when you sit with these professionals, that's what they do. And you need to pay them. You know, it's not about, oh, I got just one question, because it's never just one question. It's more than one question, you know. So you need to spend that time. Why? Because our lives are becoming more complicated, and our taxes are becoming more complicated. I remember when earning 40 some odd $1,000 for the year was pretty doggone good. Yeah, $40,000 right now could put you into the poverty level, you know. So there's planning that needs to be done. Many of you are retiring or receiving Social Security. And for some reason, people think, and I don't know how many of y'all believe it, but some reason people out there decided that when they got to be retirees that they wouldn't have to file taxes anymore. Okay, that's not true. If you're making money, if you've got a pension, you got interest income, you got your social security, you've got your retirement accounts that you're drawing from. That's called, all of that's called income. And it can be where your social security with all that income can be taxable. I know I had folks who told me, well, I don't have to, I'll see you later because I don't have to file anymore. I done made it to 70 years old. And I'm like, unless you became poor and destitute, I'll see you next year because you got to pay the taxes and you got to prep for it. Some of you may have to take out a percentage of your social security and pay taxes. There's a reason why there's a slot there that says voluntary withholding taxes, because your money, and I know some of you, I can always almost hear it, is this is terrible, but it's the way of the world, death and taxes. And there's more areas of which we need to pay attention to. And so I just say to all of you, you need to sit with your tax professionals, you need to sit with your financial advisors, you need to be proactive, even if it's just once. Okay, I want to make sure I get this in. This might be your best discussion of the year. Thank you, brother. Wow, you are releasing gems after gems. Thank you so much. I need to get with you, Ray, because we got folks in different states that we can possibly help, especially with this new tax laws that's coming about and the changing. And I love the idea that you're saying that we need to do some planning. It's so important at this point. And so anybody else have any comments, thoughts? Thank you. I hope y'all learned something today because it's so important to prepare for the new year. Today is Nia in our Kwanzaa world, and one of the principles to Kwanzaa is purpose. We have a purpose, and we don't need to let other people state our purpose. We need to state our purpose and live by it and free ourselves up and make a statement. If you're looking at, and we're going to do a show on setting up your businesses, because it seems like a lot of folks are in this position right now. They are not going back to work and they have talents. They may be able to be an independent contractor, but you got to realize that you're going to be an independent contractor and you're trying to earn a profit. Okay, so it's not just about, I've heard so many people tell you about the fact that, oh, well, you get all these write-offs and so you don't have to pay as much in taxes. No, because IRS has something called, and they've identified it this year, called hobby. If you are doing a business and you think just because, you've got a lot of expenses, be very careful. You can write off and you can take a loss no more than 3 to 5 years before IRS will look at it and say, well, you're just doing a hobby. This is not a business. You're not trying to make money. And now you've got to pay taxes on the income you claimed, but you will not be able to take the deductions. The only way you take the deductions is up to the amount that you earned. That's it. You can't take a loss. So be very careful. When you're talking about you're going to be in business, work towards making a profit and show that. It doesn't always happen. We've been through this COVID. So with that, we must be exceedingly careful in how we're handling our businesses. I don't know anybody that gets in business to say they got a loss. I didn't do it. I don't see it. I want to make money. But you get to, sometimes takes a little time. Thank you so much, Kathleen. It's one of those things that we have to, and always, just like our friend Ray Saylor said, is sit with a professional, trust a professional, let them, and pay the professional for their advice, because we take a lot of time in school and education to do this. And the thing is this to help you to get through the rough times, and there's a lot of stuff that's going on as far as taxes is concerned. And you don't want to, let me have this one little closing that I want to say to folks to be aware. If you get a letter from IRS, do not destroy it, make it disappear, forget where it's at. You got 30 days to answer it. Okay, so those of you this year who might have filed late and you might have gotten a penalty, well, guess what? There are some ways to get that penalty abated, but it doesn't mean a hill of beans if you don't answer them. IRS is like a wayward lover. I hate to put it that way, but they are. So if you don't answer, they keep coming until you ultimately have to answer them because they done took some of your property. Okay, someone says, can I add my new singing career to my enterprise? Well, that can be a discussion. It's possible, if it's part of your enterprise, depending upon what your enterprise is, how is it registered, and can you have thank you. Yeah, you've got to set it up to know what the enterprise is and can it be included. You can also have an enterprise that owns another business. So, thanks, Rex. You're on fire. Yes, you can share this with others. Definitely. Please do. My whole focus on Access Wealth Nation is to educate and to empower us so that we can be financially free and that we can make our money and not give all of it to the government. I'm not saying don't pay, just I don't want to pay it all, So yes, you may be able to, but the best thing I would say to you, Kathleen, is to sit with your financial advisor and your accountant and see if that's an addition. People have multiple jobs. I mean, not multiple businesses, and one business frees up on another one. There's structure, and I think that's what my next show may be on is structure, business structure. We've got to get this right because if you look at it, business is who makes the best moves and the best deductions, And the thing is that you can honestly have a business and pay yourself, That's one of those things that you create your own income by paying yourself. Okay, where do I find is it an advisor? You're being funny. Okay. What I say, I'm an advisor. You don't want to talk to me? Boom, boom. But another place that you can do is, especially with accountants, you can go to the irs.gov site. There's many of us registered through irs.gov. As far as advisors are concerned, I always recommend folks who are dealing with advisors is to seek out referrals, someone who has been doing well by you, or by someone else, and listen to them and then interview them. Don't just take it because you don't do that with the doctor. You go to the doctor doesn't do right by you. You don't just say, I got to stay with him because I got the referral. No, interview them, find out that they understand, because any financial advisor should want to know where you are and where you want to go and how can they help you to get there. That's what it's all. So yes, I'd like to thank you all for watching. Happy New Year. God bless you. Stay healthy. And let's get our affairs and our financial checkup from the neck up. And let's make a difference in our world for our families. And above all, build a legacy. Have a good night and God bless.
She was told that she couldn't play with the boys. She was told that they were too big, too rough, too strong. She was told to give up her dreams and move on. She was told to just be pretty, be quiet, be a lady. She was told that women had to stay on their side of the court, stay in your lane. Playing and competing with men was insane. She was told that men and women would never be equal. Screaming like that would only be lethal to your mind, to your soul. She never listened. She knew that their thinking was old. She is magic. She is the definition of spirit. She is what champions are made of. She is magic.